Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if those fancy financial reports are hiding more than they reveal. Today we're diving deep into Chevron Corporation's latest quarterly report, and let me tell you, the energy giant has been busy shaking things up with some pretty significant moves. Let's get straight to the numbers, because that is where the real story usually is. This filing gives us a detailed look at Chevron's financial health for the third quarter of 2025 and the first 9 months of the year compared to the same periods in 2024. And boy, did things change. Starting with the bottom line, Chevron Corporation reported a net income of $3.5 billion for the third quarter of 2025. That sounds like a lot, but it is actually a drop from the same period last year when they brought in $4.5 billion. Looking at the first 9 months of 2025, their net income was $9.5 billion. Down significantly from $14.4 billion in the first 9 months of 2024. This is a pretty big decrease, and it tells us the company's profitability took a hit this year compared to last. When we look at sales, things are a bit more stable. For the third quarter of 2025, sales were $48.2 billion, just slightly down from $48.9 billion in the same quarter of 2024. Over the first 9 months of 2025, sales were $138.6 billion. Which is also a bit lower than the $145.1 billion from the same period in 2024. So, while the absolute sales numbers are holding steady, the profitability is clearly taking a hit. This usually means their costs are going up or they're selling their products for less. Diving into costs, we see a big one: purchase crude oil and products. In the third quarter of 2025, this cost was $27.4 billion, a decrease from $30.5 billion in the same period of 2024. This makes sense if their overall sales were a bit lower, and potentially if they were able to source these materials at a better price. However, for the first 9 months of 2025, this cost was $82.9 billion compared to $89.1 billion in 2024. This overall decrease in this major cost category is a good sign, but it is not enough to offset the drop in profit. Now let's talk about income from their investments in other companies, known as equity affiliates. For the 9-month period ending the 30th of September 2025, this income was $2.3 billion, a substantial drop from $3.9 billion in 2024. This suggests that some of Chevron's key investments are not performing as well as they did last year. They specifically mention lower upstream related earnings from TCO in Kazakhstan and lower downstream related earnings from Sipechem, largely due to chemicals margins. So even though Chevron might be doing okay on its own, some of its partners are feeling the pinch. Another significant factor showing up in the financials is depreciation, depletion, and amortization, which essentially accounts for the wear and tear on their vast assets like oil wells and equipment. This number jumped quite a bit from $12.3 billion in the first 9 months of 2024 to $14.2 billion in the same period of 2025. This increase likely reflects new investments and possibly higher production rates, which is generally a good sign of growth but also adds to their expenses. Then we have interest and debt expense. This went from $395 million for the first 9 months of 2024 to $856 million for the same period in 2025. That is more than double. A big reason for this jump: the Hess Corporation acquisition. They assumed a significant amount of debt from Hess, and that naturally increases their interest payments. Speaking of the Hess acquisition, this was a monumental event. They officially bought Hess Corporation on the 18th of July 2025 for a whopping $48 billion. The report details how they paid for it with a mix of cash and Chevron stock, and also took on Hess's debt. This is a massive strategic move. And the company is betting big on Hess's upstream operations, especially in Guyana, which is a hotbed for oil and gas discoveries right now. The report mentions that provisional fair value measurements were made for Hess's assets and liabilities, and they're still working on finalizing those details. This acquisition is clearly reflected in the balance sheet. Total assets jumped from $256.9 billion at the end of 2024 to a massive $326.5 billion at the 30th of September 2025. That is a huge increase, mostly driven by the new assets and properties acquired from Hess. On the flip side, their liabilities also increased significantly, going from $103.8 billion to $130.9 billion. A big part of that is the long-term debt they took on. Now, let's bring it all together. Despite the massive acquisition and the jump in assets, overall profitability for the first 9 months of 2025 is down compared to 2024. This is mainly due to lower oil and gas prices and lower earnings from their investments. The report highlights that for every dollar change in Brent crude oil prices, Chevron's annual earnings and cash flow sensitivity is about $450 million. So, a drop in oil prices directly impacts their bottom line. The segment called All Other also saw higher charges. For the 9-month period, these charges increased by $606 million, mainly due to higher interest expenses and transaction costs related to the Hess acquisition, but also some pension curtailment costs. This category basically covers things like corporate expenses, financing, and other miscellaneous activities not tied to their core upstream or downstream businesses. Now, no major oil company report would be complete without mentioning legal matters. Chevron is facing numerous lawsuits related to climate change from cities, states, and even tribes. They detail 33 lawsuits from US cities and counties, 6 US states, and a lot of other entities. The claims are wide-ranging from public nuisance to fraud, and they are seeking damages, injunctions, and even disgorgement of profits. Chevron strongly denies these claims, but the sheer volume and the unprecedented legal theories mean there is a significant amount of uncertainty, and they admit it could have a material adverse effect on their operations. On top of climate change lawsuits, there are also specific legal battles brewing in Louisiana related to coastal erosion. Chevron entities are defendants in 37 of these cases. A jury actually awarded one parish over $744 million, while Chevron plans to appeal and believes the verdict is not supported by facts. This shows the significant legal risks they are facing. They have set aside $131 million as an estimated loss for these Louisiana related cases, but they acknowledge that the actual loss could be higher and potentially impact their financial position. Despite all these challenges and the massive spending on acquisitions, Chevron is still returning value to shareholders. They have a huge stock repurchase program authorized for $75 billion. In the third quarter of 2025 alone, they bought back over 16 million shares for about $2.6 billion. They expect to continue these buybacks in the coming months. So, what is the big picture here? Chevron made a massive bet by acquiring Hess Corporation, significantly expanding its assets and debt. While this strategic move aims for long-term growth and higher returns, especially in the booming Guyana region, it came with substantial costs and immediate financial pressures. The company is navigating lower commodity prices and facing significant legal headwinds with climate change and coastal erosion lawsuits. Their profits are down compared to last year, and some of their investments are not performing as strongly. However, they are managing costs where they can, continuing their share buyback programs, and seem committed to their long-term strategy. The company's direction seems to be twofold: to continue maximizing profits from its traditional oil and gas business, while also investing in new energy ventures, although they've stopped giving specific financial guidance on those lower carbon projects. The Hess acquisition is the defining event of this period, and its success will hinge on how well Chevron integrates the new assets and manages the associated risks and costs. The legal battles, especially those in Louisiana, present a considerable and unpredictable threat to their financial health. What is your take on Chevron's bold moves and these financial results? Do you think the Hess acquisition will pay off in the long run, or are the legal battles and market conditions too much of a risk? Let me know your thoughts in the comments below. If you found this breakdown valuable, please give it a thumbs up. It really helps the channel reach more people. And don't forget to subscribe for more in-depth dives into corporate filings. Also, check out our Discord community linked in the description for more exclusive content and discussions. Thanks for watching, and we'll see you in the next video.